The greatest threat to your wealth is not a market crash. It is a market rally. Data from over 2,000 active mutual funds reveals a silent tax. Disposition-prone investors, those compelled to sell winners too early, underperform their disciplined peers by 4% to 6% annually. On a $10 million portfolio, this is not a rounding error. It is a self-imposed tax of $600,000 every single year. The human brain does not process profit and loss linearly. We are risk-averse in gains, selling early to secure pride, but risk-seeking in losses, holding endlessly to avoid regret. Neuroimaging reveals that selling a winning stock triggers the ventral striatum. You are not selling for profit, you are selling for the chemical rush of being right. In the 2026 market, dominated by $27 billion in algorithmic trading volume, the shadow of human emotion is the primary source of friction. While the machine executes, the human hesitates. You do not lose because you were wrong. You lose because you were psychologically unprepared to be right. Rationally, we know an asset should only be sold based on future probability. But biologically, the logic center is constantly besieged by the amygdala. When volatility spikes, the brain reverts to ancient survival mechanisms. We treat a red candle on a chart as a physical predator. Jung defined the shadow as the repressed, unconscious aspects of the self. In finance, this manifests as identity fusion. When the portfolio drops, the investor does not see a loss of capital. They feel a loss of self. By holding losing positions to avoid the pain of realizing a loss, the investor is condemned to the Sisyphus Loop, repetition without redemption. We must break the loop. We introduce the Architecture of Containment, the psychological contract that defines your tenure with your own wealth. The shadow feeds on visibility. Research confirms that removing the purchase price from your dashboard reduces the disposition effect by 25%. We must blind the amygdala to the past so that we may clearly see the future. Non-binding plans fail under stress. The Wealth Alchemist uses binding mechanisms, outsourcing the will to the algorithm to bypass the ego's hesitation. If you cannot hold the lead of your fear during the Nigredo, you will never possess the gold of the Rubedo. The market is not a neutral machine. It is a mirror. It reflects the cracks in your discipline, the fractures in your ego, and the depth of your shadow. The stone does not change. Only the one pushing it does. If you are ready to see what the shadow is costing you, begin with the investor's shadow audit.